Are you looking for a trade? Well, if so, you've come to the right place. This is Option Sizzle's Trade of the Week, and today I'm going to show you a trade that I like in Amazon that pays you instantly and will even make you money if Amazon goes lower in the next 10 days using options. Alrighty, so we're in Thinkorswim right now, and we're looking at the Amazon option chain. So the trade that you see at the bottom is a broken wing butterfly, and this is a option strategy. And if you're not familiar with it, it's not a big deal. All option strategies are typically the same. They're just defined a little bit differently. They're going to be risk defined or undefined, but it all depends on really what your bias is and really the risk that you want to take. So for Amazon here, let's take a look at the chart now. One of the things that I like about these types of trades is broken wing butterfly, and I refer to them as jackpot trades. And the reason why they're a jackpot trade is we'll take a look at that middle strike area, but that typically reminds me of getting lucky sevens almost, because it's not really a probable trade that it's going to land right there at the middle point. But if it does, then it's going to pay out pretty well. The thing that I want to take a look at, though, is after the Greece bailout, Amazon, after last earnings, has been trading sideways in this range here and slightly going higher. Who cares, right? It's trading. What we want to look at and what I look at is opportunities. Where's the opportunity? What's setting up here? And the first thing on here you see at the bottom of the chart here is average implied volatility. Well, right now the average implied volatility has been elevated compared to what it has been previously. So that makes a good opportunity for that. Well, the other thing on here as well is that the prices of this have gone from 435 to 470. It's moved nearly 40 points in just 4 days, $10 a day. And ultimately, that's a pretty decent size move. Yes, you had this sideways range here, and you could make a case for those that watch technicals of it consolidated here and now it's going to rip to the moon. However, the market does price in stuff, and you have to realize, okay, maybe if that was the case, it did break out. But the likelihood of Amazon continuing to go up 10 straight days again, or 10 straight days from here, this is where you deploy your risk. Ultimately, I could be wrong. That's fine. You could be wrong on it, and it doesn't mean that just because a stock has run up and it's overextended. And overextended just means that it has gone in a direction and it has gone aggressively in that one direction. The range of that range was expecting this. It's kind of exceeded that a little bit. And yeah, it can exceed that range, but you could say that it probably pops back in there, comes back into that range. So it has extended here. So what's the outcome here? Well, you could look at this two things. You could say, okay, well, Josh, I love Amazon and I want to get long it. So be it. That's fine. Now, this is how I approach it. This is kind of a fade, and also if it does slowly grind higher, I'm looking for that opportunity as well. So if we go back here to the trade tab and we look at Amazon, the first thing I'm looking at, and the reason why, is I'm looking at the options with 10 days. And the reason for 10 days is because I'm looking for that pause that happens and could happen in prices. And if it does pause, or if it slowly grinds higher into that level, well, that's what I'm looking for here. And that level that I'm looking at is over here, where for these options, the implied volatility is 54.82%. And that is a range of plus or minus 35 points. So what I do there, that's a one standard deviation. From there, that's where the market's pricing the high to the low end, and a 68% chance that prices stay within that range within the next 10 days. And now we have a weekend coming up. So you could take a couple more days out of there and you have some time decay. So with that, what I'm looking at, or what I start to build out, is, okay, if I'm going to play something and I want to have a little bit of bullish bias, a directional bias to it, I want to get paid instantly and have an opportunity to make some extra money if it does fall in that range, then let's take a look at that. So 500 is going to be a key level. It's going to break out. If it does move higher, it's going to be a key level that it's a whole number. Whole numbers typically in the market mean sellers come in. Who knows the full reason why? You can speculate all you want. It just happens, especially when you see something going from 435 and if it went up to 500, you kind of have to say already, I'm going to pick my poison here. And that's all I'm saying with this, picking my poison with this. So going down and looking at these strikes here, the strikes that I selected were the 505, and that's my middle point. And from there, I start to build out. So yes, it's 35 points, a little bit higher, but I also give myself a little bit of wiggle room. So 500, you see here, 500, 505, and then I go out and I skip a strike. And this is called a skip strike or a broken wing butterfly. So what happens here is that you have a 10-point wide spread and you have a 5-point wide spread. So we have risk after 510 on this position. So we have about $5 of risk on here. And because of that risk, we take in a little bit more. We actually, not a little bit more, we take in a credit because of that. So my position here, or what I'm saying by this risk, is that if it does go higher in the next 10 days, I believe it's going to stay around 500, 505 by the time of expiration, which is really going to benefit the position because this credit is going to turn into a debit, and it's going to be really what I refer to as a jackpot. It's going to be a really nice return on investment. All right, so now we're looking at the Analyze tab here, and we're looking at the risk profile for this position. So some of you are visual and you want to know, okay, where's the max profit at? And that's going to be at the peak here. So the peak here on a 1x2x1 broken wing butterfly, you can see here the max opportunity on profit is going to be about $500. Now, it's a low probability outcome that this is going to next week on Friday expire exactly at 505. And you can't play for that kind of stuff. You know, this is the ultimate peak. This is the mountaintop, and you can't play it. What you want is you want something that falls in between this little area here. And if that happens, then that is where the jackpot opportunity is, because if you take a credit and you turn this into a debit and you close this out, you took in money and you also got paid on it, and you're getting paid even more money. So that's why it's referred to as a jackpot trade, or I refer to it as that. Now with it, I have some slices here, and slices are just price points. And I want to show you that if this had moved up 30 points today, we would have had a loss automatically. If it moved up 12 points, we would have had a loss. Now, the other direction as well, if it moved lower in the opposite direction right away, we actually would have profited as quickly. So as time passes and as prices kind of grind higher, where prices are right now at 465, and that's where the price point is right here, or actually 465.52 right here, this price point, you could see this white line. If we had moved time, we would start to see this white line bend into there, and we would also need prices to kind of slide and grind in there as well. So that's why I refer to as this trade as a jackpot trade. So you have the upside that gives you the opportunity to play for a move continually higher. So instead of saying to yourself, hey, I want to play long calls, which I would say could be a little bit risky if you just wanted to play long calls. Not only do you have implied volatility at these levels, but next week earnings are coming out as well. So you have a possible implied volatility increase that's going to occur. Now, this position is going to have a little bit of an offset on it because we are short some options in that, but it's really just kind of looking for that push higher. And it's going to be a trade that I take off before earnings because I don't want the event of the catalyst, a binary event, to push through it. So this is something I'm looking to put on before earnings and to take it off before next Thursday because I don't want to have this position into next Friday. So for that, that's the trade of the week. And again, that's going to be the weekly Amazon broken wing butterfly 500, 505, 515. And we'll see what it does.